You are welcome back. Now let's look at transactions in which services are received. The issue here is when to recognize the transaction. For example, an entity might grant share options to its employees and requires the employee to complete a specified period of service, say for 3 years. In this case, should an expense be recognized when the award is granted, or should it be recognized over 3 years period until the option vests? That is the challenge we have here. However, IFRS 2 has resolved this. It says that if the equity instrument granted, if it vests immediately, that is, the counterparty is not required to complete a specified period of service before becoming unconditionally entitled to the equity instrument. So it is presumed here that the service have already been received in the absence of any evidence to the contrary. So the entity should recognize the service received in full with a corresponding increase in equity on the grant date, that is the date when the options are granted. On the other hand, if the equity instrument granted do not vest until the counterparty, that is the employee, completes a specified period of service, then management should assume that services are to be rendered over that period. So the entity should account for those services as they are rendered by the counterparty during the vesting period. For example, if an employee is granted share options on condition that he or she completes 3 years service, then the services to be rendered by the employee as consideration for the share options will be received in the future over that 3-year vesting period. So once the goods and services received and the corresponding increases in equity have been recognized, the entity should make no subsequent adjustment to total equity after the vesting date. Okay, please note that this is very, very important, and this is an area where you are most likely to be tested in the exam. You will see when we solve examples. And note that these vesting conditions, okay, most often you see service conditions where the counterparty is required to complete a specified period of service before the option vests, often than not. And sometimes it could be performance conditions where the counterparty is required to complete a specified period of service and required performance targets to be met during that period. Okay, that's performance conditions. Okay, so we have made the main point here. So let's start with how do we measure share-based payment transactions. We'll start looking at equity settled. We'll look at it in detail. Then we'll move on to cash settled share-based payment transactions. So in the next video, we'll look at measurement of equity settled share-based payment transactions. Thank you guys. See you in the next video.